Good afternoon, everyone. I would like to welcome you to today's Lunch Money webinar presentation. By way of introduction, my name is Todd Christensen. I serve as the SVP of Advancement and Member Experience with CapEd Credit Union. We'd like to welcome everybody who has joined us here this afternoon to be able to gain additional information. We are rounding the corner. I think we've rounded the corner and we're in the home stretch, if you will. We have this presentation today, and then we have a presentation on Thursday, and then next Tuesday. I keep glancing over at my calendar. It's hard to believe that we're already in the month of November, and the month is already moving pretty quickly. For those who have joined us here, welcome. We'd encourage you to look at your view options and choose speaker view, and then also make sure that your chat window is open if you want to ask questions. We'll take those through the chat and then work to answer those at the end of the presentation. As a reminder to all those who have joined us today, that this presentation is being recorded and it will be made available post-event at capedcu.com/lunchmoney. Again, that URL is capedcu.com/lunchmoney. By way of announcement as it relates to the upcoming presentations, on Thursday, we'll meet again with Nick and folks at Tree City Advisors. They're going to round out the series on their part around debt, taxes, and all that good stuff as another follow-up to investments and their information from Tree City Advisors. And then next Tuesday on the 17th, we conclude our webinar series with Casey Taylor, our VP of Commercial Lending, that will be talking about funds for businesses. How do you secure a loan? What do financial institutions look to or look at when evaluating a request for commercial financing? But today, let me welcome Albert Kang. Albert Kang is CapEd's VP of Treasury Management. And Albert, if you can go ahead and put on your camera there. Good morning, or actually afternoon. Good to see you virtually. I think we both have the same virtual background. It may look like we're both in the same building, but we're not in the same location. If we were, we'd be appropriately wearing a mask in this pandemic moment. But welcome, Albert. Albert has been with CapEd. I think I'll leave you to share how long you've been with CapEd, but Albert is an enormous resource, a solid resource as it relates to cash management, treasury management, and has an incredible team of professionals here at CapEd. But with that, let me turn it over to you, Mr. Albert, for your presentation this afternoon. Welcome, Albert.
Great. Thank you, Todd, for the introduction. And I've been here 5 years. Last October 19th was my 5-year anniversary. So time flies when you're having fun, that's for sure. So thanks again for the introduction, and we'll get started today. So money, money, money. The connection between money and your business and organization is a really powerful thing. Today, we'll briefly talk about ways to create some efficiencies with how your business or organization collects money, makes payments, mitigate risks with online banking, and some recommendations on how to most efficiently structure your business accounts at your financial institution. Now, each of these topics that we're going to talk about today could easily have been their own webinar. So if you like some more information or have some questions, we'll have some contact information at the end of this webinar that you can get a hold of us. But all the products, services, and information that we're going to be talking about today is fairly general in nature. So again, you want to connect with your bank or credit union or us here at CapEd, and we'll provide you some more information. Cash usage has declined nearly 9% in 2020. Is this the long-awaited decline of cash? The pandemic has definitely been a significant driver in lower cash usage, but cash has already been declining earlier this year, and is now only accelerating due to businesses and consumers changing the way they spend money and accept payments. So less cash is being used by consumers, whether that's businesses or individuals, and this may very well become a permanent behavior change. So what's the impact to businesses? How does this impact business and organizations who collect payments and donations? what are other forms of payments other than cash? So less cash equals a rise in credit and debit card acceptance as forms of payment. Merchant services is a selection of service offerings provided to business owners by financial institutions like CapEd to help process those debit and credit card payments. So when we think of financial transactions, we think of cash and credit. As consumers are using less cash, debit and credit cards are among the most popular forms of payment currently. Since debit and credit card processing comes with an array of different fees depending on the processor, it's crucial to use the most cost-efficient payment system for your business. A great merchant services provider will help you do just that. So you want to take into consideration the following when comparing merchant services providers: the fees charged, contracts and terms, initial setup, ongoing technical support, and the timing of availability of funds. So those are all really important things to consider. So merchant services providers, there's a couple different examples of providers. There's direct processors, and then there's ISOs. So direct processor typically offers the most competitive rates as they process transactions directly through the credit card networks such as Visa, MasterCard, American Express, whereas ISOs, that are independent sales organizations, are providers that rely on direct processors to process transactions. There's no one size fits all when it comes to merchant services. It's important to review all options and determine which one is the best for your specific business needs. Now, merchant services fees vary depending on several factors. This includes the type of cards a business chooses to accept, the type of software or hardware you select to process payments, and how a payment is accepted. So now we'll talk about merchant services fee pricing models. As you know, there's a cost to doing business, and that's no different in the world of merchant services. There are several different pricing models that vary depending on the merchant services provider you partner with. Navigating the different options can be time-consuming and confusing, but we'd like to focus on the two most common types: interchange plus pricing, which is also referred to interchange pass-through pricing, and tiered pricing, which is also commonly referred to as bucket pricing. So now we'll move on and first talk about interchange plus pricing. Interchange plus pricing is the cost of interchange, which is then added to the merchant service provider's charge to process each transaction. So interchange fees are set by the payment networks, such as Visa and MasterCard. The fees from these payment networks are the same no matter which merchant services provider you use, but interchange fees can fluctuate and typically change annually or biannually as the their cost of processing a transaction. However, there are hundreds and hundreds of different types of interchange rates, so many variables in the calculation of cost plus interchange. This transparency can make monthly statements harder to understand. For example, the specific type of card and the way the card is processed are two variables that will influence the interchange rate that is charged. Let's say a sale is completed in person at a retail location with a card. The first factor is the card type. If the card used was a consumer debit card, it will typically have a lower rate than a commercial credit card. Then, when we take into consideration the way the card is processed, because the card was present, physically present, this transaction will clear at a lower rate than a hand-keyed sale made over the phone where the card is not present. This is due to the greater risk associated with a card when it's not physically present during a transaction. So is interchange plus pricing right for you? Interchange plus pricing generally results in lower overall rates for merchants due to the transparency of having interchange fees separated from markup costs. For this reason, it's crucial for businesses to pay close attention to their markup costs to ensure that they are not paying unreasonably high fees to their merchant services provider. Now we'll talk about merchant services tiered pricing model. Again, it's also called bucket pricing. So bucket pricing consists of 3 different tiers: qualified, mid-qualified, and non-qualified. So each tier or bucket is assigned a different fixed rate that's determined by the merchant services provider. The qualified rate has the lowest rate. The non-qualified tier has the highest rate. And the mid-qualified tier has a rate somewhere in between. Different from the Interchange Plus model, where payment networks determine the factors that affect pricing differentiation, transactions in the tiered pricing model will fall into a tier depending on several factors that are solely determined by merchant services providers. These factors typically include how the card was processed, how the payment was accepted, and the type of card being processed. So here's a tiered pricing example. If a payment is accepted in a transaction where the card is not present, all payment details must be entered and all prompts on the payment terminal must be followed to ensure you are getting the lowest possible rate. Bypassing any of the prompts or failing to capture information at the time of sale could result in higher rates. So simple, but it sometimes could be a costly pricing model. The simplicity of tiered pricing model can be appealing. However, in many cases, most transactions are charged at the mid-qualified or non-qualified tiers, resulting in higher costs. It can be very difficult to determine what a merchant services provider's markup cost will be with a tiered pricing model, making it nearly impossible for you, the merchant, to determine if you're getting a good deal or not. So this was just a very, very, very brief introduction to merchant services to provide you a basic foundation level understanding on what is merchant services, what are the different types of providers, and fee models. Now that we've had a brief introduction to how to collect credit and debit card payments, let's talk about the benefits of using a credit card as a business to make payments. Businesses use credit cards to make payments for all sorts of things: office equipment, fuel, inventory, you name it. Credit cards have multiple benefits. You may receive reward points, cash back on every purchase, and not pay interest if the balance is paid off every single month. Also, you have the security of not having and losing track of cash for purchases. Now, getting rewards or cash back is a pretty appealing aspect of using a credit card. However, the power of float may have an even greater positive impact for your business. So this is how float works. Most credit card issuers give you a grace period to pay off your credit card balance. Pay it off in full before the end of each grace period, and you pay 0% interest on those purchases. This float period can vary depending on your card. Most cards have a 30 to 60-day grace period. So you want to make sure you want to check with your bank, your credit union, your financial institution for specific details on grace periods. The average small business in the United States holds a 27-day cash reserve, 27-day cash reserve. So this means if revenue or money collected from customers stop or are disrupted, you as a business owner have an average of you can last 27 days as a business before not being able to pay expenses. This is not an ideal situation, but it's the reality that small businesses operate in. So by putting expenses on your business credit card, you may now be able to increase your float time by up to 60 days. First, you'll need to know the billing period for your card. This is comprised of 3 dates: the statement opening date, the statement closing date, and the payment due date. So again, you want to contact your specific credit card issuer, bank, financial institution, credit union for the specifics for your card. And I hope now you feel a little bit more comfortable using your business credit card for all the benefits it provides, including the power of float. Now, moving on from cards, there's a couple other ways to collect and make payments. So we'll talk about electronic transfers. So first is ACH. So ACH transfers are completed using the automated clearinghouse network that's set up between financial institutions in the United States. So it's generally low cost, and you're able to set up directly from your business online banking platform with your bank or credit union. You're able to both send ACH transfers for vendor payments or direct deposit for employees' payroll. And it also allows you to direct debit funds from a customer's account with their written permission. The other form of electronic transfer are wires. So wire transfers move funds from one financial institution to another within one business day. Banks and credit unions generally charge a higher fee for wires compared to ACH transfers. Both types of electronic transfers are definitely options based on your business's specific needs. And probably a lot of you out there use some form of online banking on your personal banking. It's also very similar on your business online banking. You know, a main feature for most business online banking is to be able to access your account and set up role entitlements. Now, again, this could be different, slightly different between different financial institutions, but in general, the ability to set up specific roles and entitlements as a business account owner is a tremendous feature to use. So as an account owner, you may be able to set up specific roles and entitlements for your employees to access certain accounts and transfer funds and set up ACH files for processing, all on online banking. You may also set up dual controls where an employee is granted an entitlement to upload an ACH file for an employee payroll, but then requires an approval from an account owner to submit or to make any type of account changes. So there's a level of control there. So here's an example. You're a business owner, you have a bookkeeper. The bookkeeper needs access to bank accounts for transferring money from one account to another each month for payroll, and then needs to submit an ACH file for those employees to get paid by direct deposit. And as the owner, you're giving them the responsibility as the bookkeeper to complete those tasks. So the account owner can then provide an entitlement for that employee to complete all the functions independently online with limited or no access to other accounts that are unrelated to payroll, and then requires the owner or maybe even a CFO or accounting manager to make a final approval before those changes are made in online banking. So finally, as the owner of the accounts, it is your responsibility to ensure entitlements are current and appropriate for each role in the company or organization that you're owner of. So since we've talked about credit and debit payments and electronic payments, we haven't forgotten about checks. Checks haven't gone anywhere. Some of us would wish that checks weren't around, but they're still here. So checks are still used regularly in some business transactions, and there are solutions to get those checks into your accounts faster, safer, and more efficiently. Using your mobile device with a downloaded app, you're able to take a picture of your check, deposit it right into your account. Again, you want to check with your individual financial institution, but limits do apply. So again, make sure you check. This is a good option if your business receives a couple checks here and there, maybe once a week, couple a month. The other option is remote deposit capture. This allows you to use an actual desktop check scanner that you may run one or multiple checks through and deposit directly into your accounts. There's typically an approval process with your financial institution and fees associated with this type of service. This may work really well for you if you receive larger batches of checks and multiple checks at one time. Some of these check scanners, again, can run a single feed, one check at a time, 10 at a time, 100 at a time, 500 at a time. So really a good option for heavy check use. Now, both of these options will save you time. And I know time is money for a business owner's life. So both options will save you time from running out to your financial institution's branch and an employee or yourself potentially misplacing a check. So this provides you the security of knowing upon receiving a check from a customer, it's going to get deposited safely, efficiently, and quickly. Now, the next thing we're going to talk about is efficient ways to structure your business accounts at a financial institution. So there's a couple different types of accounts we're going to talk about. There's an operating account. So the operating account is typically a checking account that'll include deposits for day-to-day expenses of the business. This may be up to a week of expenses, up to 3 months, 6 months. It depends on your business strategy. But it focuses on operating activities such as keeping the lights on type expenses, monthly payroll, purchasing regular inventory, and accounts payable. Just things that, again, we call keeping the light on expenses. The next type of account is a payroll account, which is specific for payroll, whether that's weekly, biweekly, monthly, or quarterly. This account is solely for payroll activities. And the next one is an excess cash or reserve account. So the funds placed in these types of accounts are typically not needed for operating expenses, so not needed for those keeping the light on expenses for short term. They're generally for saving up for emergency repairs or replacements for equipment, savings for maybe a down payment for a new building, a new facility, or again, savings for a more expensive piece of equipment later down the line. Now, adding a sweep feature to your accounts may assist with automating efficiencies and increasing interest or dividend yield. We all want to make more money, right? So that's what a sweep account could assist with. So you may connect an operating, payroll, and reserve account with a sweep, and this will allow you to set a target balance in your operating account, for example, at, let's say, 5,000. So anytime that account hits below 5,000, the sweep will automatically draw from your reserve account to bring that balance back up to 5,000 in your operating account automatically. So this allows you peace of mind that the target is set in each account automatically, and a sweep may also be used to maximize yield on interest earned in the account, especially if one account is offering a higher level of interest than another. Typically, we see in savings accounts, there's going to be a higher rate of interest or dividend provided than a checking account. So a sweep can be used to maximize the yield you're getting in a higher interest earning account. So in closing, I hope you've enjoyed the opportunity to learn a little bit more about business treasury management. And again, the things that we talked about today were just introductions, 101 type classes, and the products, services, and information provided slightly differs among different financial institutions. So please check with your own financial institution for more information. But here at CapEd, we're definitely here, ready, willing, and available to answer any of your questions and walk through any of these products and services in a little bit more detail. So feel free to reach out to us. And I'll also turn it back to Todd now to see if there's any questions that have come up in the chat that we can address at this time.
I don't see any questions in the chat at this point, but Albert, if you would, the question that I have as you went through this presentation, one that came back to my mind or came to my mind is, what are some of the pitfalls that you see small businesses who may be starting out fall into? What are some of the cautionary things or the red flags that businesses, whether they're tenured or just starting out, should be cautious of?
Yeah, absolutely. You know, one thing that really jumps to my mind, having worked with smaller businesses, startup type organizations for years, is the need for those responsible, which are typically the business owner, to be engaged in doing simple things that sound simple but can have deep ramifications, like check your bank statements, log into your accounts regularly, take ownership on understanding the costs between on how you collect payments, whether that's through collecting payments by cash, check, credit card, and then the cost of making payments. So the thing about small business owner, you're looking at security and risk. So check your bank statements, be sure you're the one who's logging in and checking activity on your accounts, not just relying on a bookkeeper, not just relying on a third party, then also constantly looking at that, the fees and the processes of how money is coming into your business and how money is going out. You keep an eye on those three things as a small business owner, you're going to be way ahead than if you did not.
Okay.
Yeah, great question, Todd.
We do have a question here in the chat. Read it. Does CapEd provide a cost analysis / comparison if someone were to provide their bank or credit union to your treasury management team?
Yeah, absolutely. So Todd, you broke out a little bit, but I think I heard you say there's a question about, does CapEd provide cost-free analysis when it comes to reviewing your current merchant services provider, current banking relationships? Absolutely. You know, we have a team of very experienced, very skilled business and treasury management professionals who are very skilled at reviewing different statements and different costs, and also providing you a very knowledgeable kind of dissection on if you're getting a good deal, if you're not getting a good deal, questions to ask your current provider, questions to ask if you're looking to change to a different provider. Those are all definitely things that we provide, no cost, whether you're a member or not a member of a CapEd credit union.
We know that through either some family members or friends, they operate large or small businesses, and on occasion they're asking, how the heck do you read their statement? And what does this mean? What does that mean? So that's great to know that CapEd would provide that to individuals, both who are members, have a personal relationship with us, but don't yet have a business relationship with us, and are interested in those services. A question that I have is, what type of, and this is more specific to CapEd, where you're the VP over treasury management and your team working with businesses, organizations, where's the sweet spot for CapEd? What type of businesses or organizations does your team really like working with? Is there that sweet spot, or is there a wide variety that you like working with?
Well, I'll respond by saying CapEd is open for business. And when I say CapEd is open for business, I'm talking about whether you're a not-for-profit organization, whether you're a municipal organization, governmental, schools, PTO, small business owner, large multi-site business, startup. The services and products and expertise that we have at CapEd allows us to confidently educate and provide the services needed for most of these types of organizations. And if there's something that we can't provide or cannot do for you, part of our ethos is to find someone who can. So we're very committed to the business experience, but again, the business member experience encompasses all types of organizations that would need business-related deposit and cash management services.
Okay, that's good to know. And I know that we have a conversation here around treasury management, and I appreciate your team and their expertise in being able to break it down in, you know, from the big blocks to the smaller blocks. In our relationship that we have here at CapEd and our respective teams working with businesses and schools, I always value and appreciate your team's ability to take the complex to make it simple. And I think too often businesses look at money management or treasury management, they're good at running and doing their business and manufacturing or providing the services, but then it comes back to that, oh, now we got to take care of the money, and they start to get frustrated. So our appreciation to you and your team and being able to work with those businesses. Any other words of wisdom that you'd like to share here on a mid-November day as it relates to money management and treasury management?
I think, again, just don't hesitate to reach out. Again, here at CapEd, we are very excited to have conversations with businesses and organizations. It's something that really excites us. It's a passion of ours. And just as your passion is running your business, our passion is finding ways to help your business. So feel free to reach out to us, and thank all of you business owners, not-for-profit organizations, schools, government entities that are out there doing the things that make our communities great, that provide us the services and products that we need in our daily lives. So I want to thank all of you for all the things that you do for us as well.
Thank you, Albert. We appreciate that. On the screen there, you can see Albert's team's communication or contact information, rather. They can be reached at the 208-855-4634, or they can be emailed at TM. Again, TM stands for Treasury Management at capedcu.com. This presentation, again, is being recorded and made available at capedcu.com/lunchmoney. We extend the invitation to you to join us on Thursday for a continued conversation with representatives from Tree City Advisor. And then as we round out the series of the Lunch Money webinar series on Tuesday, November 17th, with our VP of Commercial Lending, continuing the conversation for businesses with Casey Taylor. So with that, we appreciate you attending. Thank you again to Albert. We appreciate your expertise, that of yourself and that of your team. And we'll wish everybody a great afternoon. Thanks for joining us today.